You're listening to Mortgage Lending Mastery. Get the knowledge you need to advance your mortgage practice quickly and efficiently from Jen du Plessis, America's Mortgage Mastery mentor with over 37 years of experience and over $1 billion in lifetime fundings. Jen has been mentoring loan officers and realtors for over 15 years and speaking on stages across the globe. So settle in and get ready as Jen and her guests share their experience, passion, and strategies to help you crack the top producer code to reach new heights in your business. And now, here's your host, Jen du Plessis, Mortgage Mastery Mentor and head chick in charge of Kinetic Spark Consulting.
Hi, everyone, and welcome back to this episode. I'm your host, Jen du Plessis. I am delighted today to have Michael Blank with us. And let me tell you a little bit about him. This is so exciting because, you know, whenever I get the chance to speak with a real estate investor, it's right up my alley. It's stuff I love to hear about and love to do. And Michael, he and I were just talking. He's from Virginia, originally outside of Washington, D.C., right up the road from where I'm at, technically 30 miles, but right up the road from me. He's a real estate investor. He's a best-selling author of Financial Freedom with Real Estate Investing. So you want to listen in. He's a speaker and leading authority on apartment investing in the United States. I really love that. He's the CEO of Nighthawk Equity. Love the name. I have a company called Black Fox Investments. So love the name. Host of the Financial Freedom with Real Estate Investing podcast. So welcome to the show, Michael. We're so delighted to have you here today.
Great to be here today.
Thank you. Thank you. So let's just dig in on how you got started. One of the things that I think most people ask about real estate investing is, because I know, and I think most of our listeners know, is that there's a lot of wannabe investors. There's a lot of money spent on going to classes and courses and gurus and all that, and really no action is taken. So give us an idea of how you really got started in this.
Yeah, I read Rich Dad Poor Dad in 2004, and I thought I was considering myself a relatively smart person until I read that book, and I was, I'm such an idiot. Like, it doesn't matter how much money you have in the bank, what your salary is. It matters how much passive income you have. And I had, basically none.
Zero.
And
right.
Zero. Right.
Yeah.
I had maybe a tiny pennies, but none to speak of really. And that really shook me to the core. The problem with the Purple Book is that it doesn't actually tell you how to get financial freedom. It uses words like real estate investing and cash flow business, and that's about the extent of it. And so the readers left to figure out, well, how am I going to do it? So when I read that book, I made it my mission to kind of get this financial freedom. And I did a bunch of stuff to try to get it. And it took me 10 years to figure it out. And in the meantime, I lost everything I had, almost my house in the pursuit of it. But at the time, I had a bunch of money. I had a bunch of money because I was part of a software IPO. The company I joined in the late 90s had a software IPO, put a bunch of money in my pocket. Therefore, I had a runway to experiment with. So I learned how to trade stocks and options. I flipped a couple houses. I took an apartment boot camp even 2006. But my big idea was restaurants. Restaurants. Because, the Five Guys Burgers guys, right? They came from Northern Virginia. Right. And I was around some of those franchisees and they're like, oh yeah, you hire a guy and you print money. You're printing money. I'm like, oh, wait, I want to print money. This is great. Of course, it's Five Guys was sold out at the time. So I got into a pizza franchise and I just went all in. I was like, this is it. This is my ticket to financial freedom. And I went all in and it worked great for about 2.5 years until the recession came and that changed everything.
Right.
And it really kicked my butt, pretty bad. And I was in a pretty deep hole. And then I remember the real estate investing stuff and started flipping houses and raising money to flip the houses. This was in PG County in DC, a little bit in Baltimore, and kind of try to
you don't want to go too far into
out
Baltimore,
of the hole.
Right?
Yeah. Right. Very lightly.
Yeah.
So that was the journey until I kind of, accidentally got into an apartment building in 2011. One of my flipper wholesalers got me this deal. It was listed by a real estate agent. And I ended up buying it. It was my first syndication where you get money from investors. I had 5 investors and I bought this thing and it was itself a nightmare. I immediately regretted getting into it because I had a professional tenant in there who had made my life miserable hell. It took me about 12 to 18 months to stabilize that. And then I went on happily, flipping houses. And then one day I was like, man, this is insane. I'm trying to get out of these restaurants. I'm flipping houses. I'm working like 80 hours a week. And I'm like, this is nothing passive around any of this stuff. There's a cash flow business,
it's a monopoly
real estate,
game,
and I'm
right?
killing myself.
Yeah. It's a monopoly, right?
Like
running around the monopoly. Yeah. Without the hotels. Yeah.
Yeah. Without the hotels. Right. And so it was not, there was no financial freedom in there at all until I was like, well, maybe I should stop selling houses, maybe hold on to them. That sounds like a good idea. I was like, well, shoot. Okay, I can maybe cash flow $150 a month per house. I was like, well, if I want $10,000 a month in income, I'm going to need a lot of houses. And I just got done flipping 3 dozen. I'm like, no, I'm not doing that. That is no way. I'm accumulating a portfolio of 50 houses.
Yeah.
And so finally I was like, you know what? I probably need more of these buildings and stop flipping these houses. And that's kind of when I mentally took a shift. But at that point, I'm like 7 years into my journey. Right. And I wasted so much time, so much money, so much energy, and it was just a giant waste. And now today we have a much more direct path to financial freedom. And it is with apartments. And it surprises a lot of people because people think it's an advanced strategy. You need a lot of money for it. And it's actually not true. So we're using that as our platform to accelerate financial freedom, whether you're an active investor or a passive investor.
Yeah, I love that. So you have partnerships that you've created. For some people, it's just, an investment of money, others investment of time, putting those apartments together. I know someone that is really big in this, right? Grant Cardone, he's doing this at the $50 million and $100 million level in apartment buildings, and accumulating investors and, doing all of that as well. So when you started doing this, because obviously, apartment buildings is a different type of lending feature, right? It's unless you're paying cash for it, unless you're able to pay cash for it by pulling all these people together. It's definitely a different type of lending. So how did you embark on that? Because I think that's one, not boundary wall that people kind of, or hiccup or speed bump that people run across, is that they don't have the experience in the commercial side. For the banks, tend to say, well, you don't have the experience in it, but bring in another investor who has the experience and we'll talk. So how did you get past that? Because that becomes the hurdle that most people then say, well, okay, this is too big for me. I probably shouldn't be doing apartments. I'll go back to, the onesie twosie and investor.
Yeah, the experience is not so much on the lending side as much as on a lack of belief side. Like, I don't have the experience, therefore I can't do it. The lenders, interestingly, when you get to commercial real estate, as you know, is they typically tend to underwrite more of the actual commercial real estate and less who the people are borrowing it.
Yeah.
So yes, do they look at your credit score? Yes, they do. Do they look at your net worth? Yes. And if you don't have the net worth and liquidity requirements, is it possible that you won't qualify for the loan? Yes. But it's easy to fix in that perspective because you can partner with people. And there are plenty of people who are high net worth individuals who will simply sign on the mortgage, on the note with you because the risk is so low. And a lot of these loans are not non-recourse. You don't have the person to guarantee them. So if something were to go bad, the guarantors are not going to lose their house and their cars and their kids and their dogs, right? They're just going to take the building back versus a house. Well, you're personally guaranteeing a mortgage on the house.
Right.
And so if I'm co-signing with some knucklehead, I'm like, I'm not so sure. But on a commercial property, a lot would have to go wrong and there would have to be fraud committed for someone to go after you personally. So the risk factor is a lot lower on the lending side, but it's more on the belief side, I think, is the issue, because a lot of people think, oh my gosh, there's this building, I need all this money, all this experience. Oh, I know. Let me invest for 5 to 10 years in single family houses. And then I'll take that real estate, that experience and the money I make, and I'll graduate. Okay. It's not a bad plan, but it's an unnecessary plan.
Yeah, I love that you're saying that, because those that are listening in on this podcast, are saying, how can I make an impact in my business? How can I make an impact in my life? Help others as well. So I want to ask you a couple of other questions, relative to, what propels you to do this? I mean, I understand that you wanted, Rich Dad Poor Dad, which Sharon Lechter is a very good friend of mine, who wrote the book. And I know that we all want this financial freedom, and I consider flipping houses to be the S on the left side, because you're trading time for money. You always have to be hunting for the deal. And that's why, we've always done buy and hold. for that very reason. So I know that you want that financial freedom, but there's got to be another passion that's deeply embedded into why you want to serve people that are underserved, in the apartment building or rental, area. Why do you want to be a landlord? Because I do think that, like you said, it's a mindset. You can't just want the money, you'll hate it.
Yeah, it started that way though, right? It started that way, which and this is, I think, when I read the Purple Book, in my mind, it was about the money. Yes. Was I trying to take care of my family? Yeah, but it's really just an extension of me. That's really where it started. And I think anytime you think about, just it's about money, it's a very, very superficial why, right? It's a very super, and it's not going to get you through the difficult times that you have. And for me, I was just fixated on this $10,000 per month. I never bothered to ask the question really, so what? So you have this money, why? So what? Great, good for you. Well, now what, right?
Yeah.
And this is something I had to learn, and I only learned this at the depth of my misery when I was at like 2012, when my restaurants are losing $20,000 a month, and I'm like, sitting in the corner sucking my thumb. I'm like, why am I here? Like, why am I on this green earth, right? And this is where I just get I had this conversation with God. I'm like, why did you put me here? You made me quit my job, and now I'm in this position. And I got a very strong impression that I was to share with others my journey to financial freedom, as misguided as it was, and figure out the more direct path. Because my conclusion was that financial freedom is to a large extent a precursor to significance, meaning that if you are working 60 hours a week, it's very difficult for you to figure out your purpose in life, and more importantly, actually take action towards that purpose. Because a lot of times, especially in the beginning, your purpose is not going to be a money maker. Right? That's why we have jobs that we maybe don't like as much, right? But our true purpose is over here, being a school teacher, or doing nonprofit work, or inner city work, or whatever the passion is, art, I don't care, right? Whatever it is. But I can't do it because I have to provide for my family. And this frustrates people. And so my part of the solution is let's help people become financially free with something that you can do that literally gets you financially free in 1 to 2 years, and has the widest application to people, regardless of who you are, what your background is, what your resources are, who you know, or any of that. And that is apartment buildings. It's a surprising thing, because people are like, oh my gosh, it's a super advanced strategy. Let me tell you, it's not nearly as advanced as you think it is.
Yeah. Yeah. So it became something for you is just, how can I make a significance in the world? And, it's funny, because that's exactly what, my whole path has been is, I think what we do is we learn, we earn, and then we want to return some way. Right. And if we earn in a great way, and we use our money smart, right, our everything that we've earned smart, and we don't buy $70,000 watches and, accumulate, right. Then we have the opportunity to get back to people in another way. Okay. So, and I want to ask you a couple questions about your book. And I know it, for those that are watching the video, right, you see it sitting on his desk, but I want to ask you a couple things about the book, about what you think is the best advice you're giving in the book. I'm listening to this podcast and I'm going, okay, he's saying that this is easier. Come on, can't be that easy. Right. I know you're saying it. I hear that a lot from a lot of people. Let's say I have $10,000. Can I do anything? Or do I have to have 100,000? Because now someone's listening and they're thinking, okay, I'm going to make this difference. I'm going to make this change in my life. What do I really, really need? But thinking about the book and that question at the same time about the book, what's the number one advice you want to give to someone?
Yeah, I mean, the number one advice is that you should strongly consider investing in apartment buildings. That's really the number one. And the two main objections I hear from people is that, this is great, Michael. I get the cash flow, the wealth, the tax benefits, blah, 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 but I don't have the money. I don't have the experience, right? It just boils down to that.
Yeah, it does.
So the first part of the first part of the book just deals with that straight on, because I can teach you how to analyze deals, how to find deals, how to talk to brokers, but blah, blah, blah. You're not listening to me because you can't move past that. So
yeah, but I don't have the money. But I don't have the money. I don't have the
money. Right? I don't have the experience. Right. So
yeah.
What I can tell you is it's surprising how quickly you can overcome both of those things. It is shocking to people, meaning that the money part you can overcome by raising money from individuals, and these individuals have a problem. which is called the stock market, right? They invest in the stock market, and they're frustrated by their inability to plan long term because of the volatility. They can't get cash flow from it, so they can't
It's
retire.
linear.
They can't become
It's
financially
linear.
free.
Right. Yeah.
Linear, and I pay too many taxes. So
Yeah.
you educating yourself.
Yes. Get ready for 2022.
Right. Right. So real estate syndications
Yeah.
solves all those. Therefore, once you know how it works, all you're doing is you're educating people around you. And these investors with money, they will lean in, because those are exactly the three problems that they're struggling with on the financial side. And you appear to have a solution. So it's a matter of educating people. And so doing, you're actually adding value to people. You're not begging them for money. You're adding value to them. So what I'm saying is raising capital is actually surprisingly easy, especially in this environment where there's so much cash.
It's cash, and there's so little being paid with the cash, that people are looking for other vehicles. Yeah. And unfortunately, I mean, from my perspective, unfortunately, they're all jumping into Bitcoin because they hear that's really cool, and NFTs, and, and I think all those are wonderful. And I have both. Okay. But a little bit of both, not a lot of both. Right. Yeah. Yeah.
The second objection is experience, right? I don't have the experience. So this is where people say, well, let me flip a house. Let me landlord a little bit. Let me get some experience. And again, not a bad plan. It's better than 98% of other Americans, but it's unnecessary. In other words, what you need to appear more experienced is you need to educate yourself a little bit. So you're using the right language and you're delivering it with some amount of confidence. Okay. So you need a little bit of education, but you need education anytime you pick up anything else.
Yeah.
Right. When you start playing
Stocks,
golf,
options, Bitcoin,
anything, you got to use the right word.
Yeah.
So when you talk to people, they don't go, oh, he's not a newbie. He seems to know what he's talking about. And number two, and this is a difference from single family houses, is you got to build a team. So on your team, you have a lender, for example, you have a property manager, you might have an attorney and a CPA and a property manager. And so when you call brokers or talk to investors, you talk to them in terms of your team, right? So now the focus is not on you and your lack of experience. It's much more on your team. If you have a property manager, for example, who manages 5,000 units, well, you're talking about your manager who manages 5,000 units, not me, who has never done a deal before, right? If I have a lender, they've done $1 billion of loans last year. Well, they're not even talking about me. And now they're like, oh, wow, you're pretty serious, right? You're serious. You're using the right words. And also,
and you're going, I'm seriously not experienced, and I'm afraid, right?
Yeah. But so what I'm saying is you can overcome both your lack of money and your experience within a matter of 60 to 90 days, 60 to 90 days. And you have a degree of confidence. You have learned the art and science of raising capital. And now you can buy an apartment building. And now you just got to pick your favorite size. If it's a duplex, buy a duplex. If it's a 50 unit, buy a 50 unit. At the end of the day, it doesn't matter. It doesn't matter because of the progression of the deals.
Yeah. It's a law of return, right? I mean, I was going to say diminishing return. I didn't mean to say law of diminishing return, but it's compounding, right? It's just scalability. And so I think that's really interesting. Okay. So again, I'm going to go back to the question, how much money does someone need to do this? I mean, if you're doing a duplex and you're doing a duplex in Baltimore near the inner city, you probably could get away with 10,000 plus maybe another investor to help you.
Yeah. So again, pick your favorite entry point. The reason I said it doesn't matter is because of the law of the first deal. The law of the first deal is something I coined in the book, and it's a fascinating phenomenon because of the progression of the deal. If you buy a duplex, the second deal is going to be around 10 units. The third deal is going to be around 25 units. And then the fourth deal is going to be between 50 and 100. And this is for a variety of different reasons. It just is. I've literally not found a single exception to the rule. As long as you approach a duplex from a multifamily mindset, because there's a lot of landlords who buy a duplex, even quad, because they have a single family mindset.
Right.
If you
because
have a
they're living in one
mindset,
piece. Yeah. Yeah.
Maybe. But the point is you got to pick your favorite entry point. But once you wrap your head around the fact that you can buy something with other people's money, if you can do that, it's just a matter of how many people can you talk into investing with you, right? Well, if it's two people, well, you get $100,000. What can you buy with that? Well, then you buy that, right? Yeah. But you might be able to talk 5 people into it, like I was able to do, and that's $250,000. Well, now I can buy $1 million building. So now it's a 12 unit in DC, right? Yeah. And now even more
and high rent,
you can joint venture with people. So let's say you have a deal. There is someone like you who basically hates the idea of finding and analyzing deals because they hate spreadsheets. But what they love is relationships and networking. And their biggest thing, they're focusing on raising capital. And their biggest problem is they don't have the deal. So there are people like that out there. So if you have a deal, a 50 units, 75 units, you need $3 million, there is guaranteed one or two people that are dying for a deal that you might have. Therefore, why limit yourself to a duplex when you know that you're one relationship away from a 50 or even 100 unit?
Yeah. Yeah. And I think that's good. It's sort of like go big or go home. If you're going to spend the time and energy, just do it. I mean, our first, although I don't know that this is big, but our first multifamily was 9 units. And we thought, wow, we've arrived, right? Buying 9 units. And then we went to 21. Right. And, and that's exactly what you're saying is there just seems to be some type of progression. So I have a couple questions about the market, what you're seeing in the market right now, because we've seen what a lot of people coin as a softening in the market. I don't see that. I see it as going back to normal, after what happened with COVID. But we also have forbearance issues. We have, so there's a lot of single families that, could be potentially coming up for some type of foreclosure. And I know me as an investor, I'm getting myself prepped, to be able to walk into that market. I just bought an auction house, in Illinois a couple months ago, and we're in the process of reselling that. I'm holding the note, passive income, right? I'm holding the note on it. So where do you see the multifamily market or apartment building market coming? And what have you seen over the past, year and a half? And then what do you see as what's coming up? Because I know that some people may be thinking, well, is it too late? Because I'm asking the questions they're thinking.
I know that's again a very, very common question. One of the things that I really like about multifamily specifically is how recession proof it is. If you look at the way it performed in 2008, it was amazing how low the default rate was in 2008 for multifamily buildings. So COVID was a fantastic test of the asset class. So in April, we're sitting there biting our nails going, what's going to happen? Are people going to stop paying rent? Right. Because there's eviction moratorium. And what was interesting is they didn't stop paying. They chose to pay. I think it's because the uncertainty in the world around their health and their jobs, the one thing they can control is their housing. So they actually paid their rents. Now, there's always a portion of people who can't pay the rents in any market. Okay, so that's different. But the majority of tenants paid their rent. So it was surprising in April and May and June to see collections basically be very consistent with what we had before. Now, we had to change the way we had to communicate with tenants. We had to remind them that they actually owed rent, even though we can't evict them, that once we could, we would and go after them, and they actually needed to pay. They're like, oh, I didn't know that.
Right. So it's sort of like forbearance, right? A lot of people don't know that's going to happen too, right?
That's right. And then, of course, the government stroked a bunch of checks to everybody. And then there's these PPP loans, which we got some benefit of that. And then there's direct loans where the government literally paid people's back rent. So we got tens of thousands of dollars from the government directly to us for any kind of back rent that the tenants may have owed. It's staggering. So our collections were unbelievable. Then coupled with this inflation we've had over the last 12 months, our rents are up like 10% across the portfolio. I don't know if you're seeing the same thing, but it's amazing.
Well, I am with my Airbnbs, right? I've doubled the price on my Airbnbs.
Exactly right. So you're seeing it all over the place. So looking back, it was amazing how resilient the asset class was. The next question becomes, well, that's great, Michael. Now, what about, it seems like, the prices are pretty high. We seem to be some kind of bubble. Should I wait this one out? Which exactly what happened in 2008, of course, which was an actual bubble. But right now, I don't think we're in a bubble because the fundamentals are completely different than they were in 2008. In 2008, you could buy a house, hold it for 21 days, and sell it for a $30,000 profit with nothing having changed whatsoever, except that everybody wanted to get into real estate. Now it's changed. That the fundamentals is that we're in an inflationary environment. Everything's going up, number one. And number two, due to that, I can't build any more affordable housing. Okay, because it's too expensive. I can only build Class A.
Well, you can't build it anyway. You can't get people out there. You can't build
anyway. So someone who can't afford more than $700 a month in rent is not going to go into some new apartment building that costs $2,000. Okay, it's just not going to happen. So there is limited supply and an ever increasing demand for affordable housing, especially with COVID when people started moving into the southern part of the country. So now you have you have a limited supply in, say, Atlanta, Huntsville, Austin, right? And everybody's moving in this area. Well, the prices are going to go up, right? And people can afford it because their incomes have been going up also. Therefore, I mean, as I'm looking into it, prices are going to continue going up. Maybe not as much in the last 12 months. Maybe we're only going to be at a 4 or 5% inflation, but they're going to go up nonetheless. And with it, the value of this real estate, which is why I love real estate as a great inflation hedge, kind of like gold, except that it has cash flow.
Yeah. Yeah. No, I totally agree. I totally agree. Okay. So thank you for sharing your thoughts on that. Yeah. And I agree with you too. And that's why I said I'm getting myself primed to go after, right? I'm just saying, getting all of our ducks in a row. We're creating some new LLCs. We're doing all of the actionable items that we need to do to take action to grow our portfolio. So the second thing I want to ask you about is commercial space, because with COVID, people have withdrawn from that. They're not really going back into it. There's, I know that it's pretty inexpensive to get an office building, right? I mean, an office, if you want an office, right, it's pretty inexpensive. What are your thoughts? Because this is what my thought is. And so let me just ask you, do you concur? What do you think about it? But I think that with the shortage of housing, that we're going to see transition in commercial into converting it into apartment buildings and into different spaces. And I think that's going to open up a lot of doors. What are your thoughts on that?
It's definitely a possibility. We've already seen it with hotels. Even in, for example, Tyson's Corner, they were converting to Sheraton into, this is a luxury high rise in the middle of, Northern Virginia into, into apartments, senior living, that kind of stuff. And you're seeing more of that. In fact, part of the strategy, some of our students, for example, and people have been converting hotels into apartments. These are especially ones that have kitchens in them, things of that nature. So we're already starting to see some of that. The question is, sometimes you swing the pendulum too far over. Everybody's moving into the suburbs. Then you go run in and buy a bunch of stuff in the suburbs. And then 3 years later, we're like, oh, I really miss walking everywhere. I'm going to move back to the city. And you're like, oh crap, now you have all this, so you got to be
all this land like I do. Yeah. Yeah. Right.
Yeah. So I don't know. I don't know. Converting stuff and changing the use of it, to me, it really is an advanced strategy. I mean, you got to understand zoning and permitting and all that stuff. But my gosh, with a shortage of housing, it's something that you need to look at for sure. And you've seen it more than in the last 12 months than ever before.
Oh yeah. And I think, and I don't necessarily suggest anyone listening that doesn't have experience says, hey, I think I'll go into doing that. I'm thinking more that the conversion will be happening by the developers, right? The developers will start doing that. And then we can buy those types of places. I've seen a lot of that, even the malls. I'm now starting to see that that's being transferred, transitioned and converted. Although I kind of think they just need to be tore down and put more housing up instead, because nobody's going to the malls anymore. Kind of an interesting, concept in there. Okay. So as we look to close out our time here today, this has just been fascinating. Of course, fascinating because it's something I like to look at, but this is really where, everything in my podcast is about transition. It's about taking action. It's about learning. It's professional and personal development. And I know that you offer some classes for people. So tell us a little bit about the structure. If someone's listening and says, hey, I want to get really involved in this. I do want to take action. I have some cash and it's been sitting dormant. This is a great way for me to get started, and I can attach myself, to Michael.
Yeah. So I don't want to sell anyone anything right now. I think the biggest thing is, like you said, educating yourself a little bit. And two great ways to do that is to look at the book. It's called Financial Freedom with Real Estate Investing. It's yellow. It looks like this, right?
Yes. I love it. I love it.
And the podcast has exactly the same name. And it's also yellow. It looks a lot like this cover. It's Financial Freedom with Real Estate Investing. So look into both, because it gives you the foray into the whole world of real estate syndications. And what I'm trying to do is I'm trying to lower the bar from people's in their minds of how accessible this is. This is not an advanced strategy. If you're interested in investing, we have a report called What's a Better Investment, Stock Market or Real Estate, right? You kind of know the answer to that already. But in that report, we talk about syndication specifically. So you're not buying a townhouse necessarily, but you're buying a syndication, right? You're passively investing. And that's at themichaelblank.com/report. So if you're more in a passive minded, that's probably the best entry point. And once you go like, oh my gosh, this is for me, at that point, you can say, okay, well, maybe I can invest more in my education. And we have stuff for that as well. But that's a little bit down the road. I think education is probably the first step.
Yeah. It's like, take that. Don't jump in. So what you're saying is go to the pool and then assess before you hop in, before you even put a toe in. Don't come into the pool, right?
Don't cannonball in the pool quite yet.
Right, which is what a lot of people do. This is the whole, investor wannabe is they start, just jumping into every type of thing that they hear about and then, don't always succeed in all of those things and say, hey, I've tried it. I mean, for example, my son's an options trader. That's what he does. And he has a company that coaches people on options trading. And he firmly believes in it. But guess what? He also owns a ton of real estate. So it's the diversification to be able to create the wealth that you're looking for. So Michael, as we tidy up our time today, right now, tell us a little bit about your mantra. What is the mantra that what do you want to leave us with? What do you want to leave us with? A mantra, a quote, thoughts, on how to achieve this financial freedom?
I would say take some time to create clarity for yourself. I've studied this now. When you said action taker, why do some people take action and why don't? And I think it's because there is either great clarity or lack of clarity. And I was guilty of this. I was guilty of this myself. I read the Purple Book and I'm an action taker. And I was like, oh, I'm going to take some action. I don't care what it is. As long as I'm taking action. And it would have been better had I just taken a little bit of time to think about what I'm doing. If I had played this forward and I thought about the restaurants and I thought about what's involved and the work and the downside, or same thing for flipping houses, what's involved, what lifestyle would this produce, even if I were successful? And had I done any of that, I would have gone, oh my gosh, that's not it. I don't know what it is, but that's not it. Right. So therefore, clarity means, what do you want in your life? And what do you not want? Right. And financial freedom is one of those things. It's not a dollar figure, though it is an economic thing. It's financial freedom. What does that mean to you? And if you could achieve it, what difference would that make? Right? How would that make you feel, or what kind of person would you become? What kind of impact could you make? And when you become clear around that, it now gets you excited, and you now are naturally propelled to want to take action because you've now, tasted what that future might look like. And now action is inevitable, right? Now you just got to figure out, the strategy, you got to do it, but it's the clarity that most people don't spend the time doing. And I think that is the missing link between inaction and action, is to create clarity for yourself.
Yeah, it's so true. And, again, I mentioned, Sharon's a friend of mine, and one of the things, so I've had the beautiful luxury of being on her ranch and, really learning the cash flow quadrant directly from the person who created it. Right. And one of the things that she says, and I just want to point this out because you talked about this. And by the way, I talk about clarity all the time. It's the first, it's the first C in the 5 C's of cracking the top producer code that I do in my coaching. And it's about clarity. It's like, what do you want? What do you want? Right. But the one thing that she said, and I mean, this is just so simple, but I want to bring it to the forefront because you've mentioned it so many times on this podcast, is that financial freedom for most people is star in the skies, right? Like way high up there in the skies. And this is why people don't take action. Financial freedom is when your passive income is equal to or greater than your job. That's financial freedom. So if you make $70,000 a year and you can replace the 70,000, that's financial freedom. It doesn't have to be millions and millions. And I think this is why people don't have clarity and why they don't take the action, because it's so unattainable in their mind's eye because of the lack of clarity that they have to have millions and millions and millions. And this is something that she's now talking about all the time. And by the way, she addresses this in her book, and I can't think of the name of it right now, but something with the devil. Gosh, dang it. Can't think of the name of it, but in her book about that is, it's wrestling with the devil or something like that. And it's really about the evil of money. Right. And, I think this is something that really people need to understand, is that you don't, like you're saying, you don't need the advanced strategies. It's just that simple. And if you have that clarity of what financial freedom means to you, not what it means to Michael, not what it means to Joe Blow or what it means to somebody else, what does it mean for you, is so much easier to take action because the gap is not as big as you think it is. And that's why you're saying people can get this financial freedom in 1 to 3 years.
Well, that's right, because of not only the cash flow, but you get these fees from these acquisitions. They're called acquisition fees. It's kind of like a commission, but you don't need a license for it. And they can be substantial. They're 3% of the purchase price. So if you buy if you syndicate $1 million building, That's $30,000. Now you said 70,000, right? So all I need to do, here's the rule of thumb. If you want $10,000 per month, just buy $2 million apartment buildings every year, just roughly, which is not much because you're raising money, you have partners, $2 million a year, and that's $10,000 a month in income. And a lot of people can do that within 12 to 18 months. It's unbelievably powerful.
Yeah, I love it. I love it. I love that you said clarity. Thank you so much for doing that. And it allows us to just have that. And look at, you just chopped it right down into the most simple way. And you even said, hey, to buy a $2 million place, I need 250,000. I need 5 people. I need 12 people. I need 2 people, whatever that number is. That's what you want to go and try to figure out if you want to buy that big one first. So I think that's wonderful. Michael, thank you so much for sharing this. I am so excited. I hope that you're sending me a copy of the book. Right. So I can read the book as well, because I love learning all the time. And I know that this is going to make a significant impact on people. And that's what this podcast is all about, is taking that action and, knowing that these are the transitions that you're trying to do to make a significance in your life, in your family, and in the world, if that's what you're trying to do. So thank you so much for embarking this information to us today. And we really, really appreciate it.
Well, thank you for having me, Jen, and thank you for what you're doing to mobilize your listeners to take action. I think we need more of you.
Well, thank you. Thank you very much. And just everybody, I just want you to know that we will have all the links that Michael has addressed, and we have lots of them. You can connect with him. You can follow him. You can learn from him. And thank you again for taking time to listen to this podcast today. And don't forget to give us a great 5-star rating. And please take the time to write just a couple sentences of a review. It keeps us going. I love watching and reading those reviews. So again, thank you for your time today, Michael. I appreciate it so much, and we'll catch you on the next episode.
Thanks for listening to Mortgage Lending Mastery. Be sure to subscribe to hear more sales tips, ideas, strategies, and tactics to help you with your personal and professional growth to multiply your results in record time. And if you like what we're doing, don't forget to give us a rating and review so we can continue to bring you the best content possible. Wanting more beyond the podcast? Join our Mortgage Lending Mastery membership community, where you will find extended interviews with our favorite guests, weekly training, tips, and insider secrets, fireside chats with Jen, free content, meet, share, and collaborate with other members, and so much more. Click the link in the show notes to learn more about this exclusive content. Mortgage Lending Mastery is an Industry Syndicate charter podcast. Industry Syndicate is the first podcast network specifically for the mortgage and real estate industries. Get the Industry Syndicate app in the App Store or Google Play today.